Hello and welcome to Fin Business. Today we are in conversation with one of the top mutual fund company, which is SBI. And we are going to talk with Mr. Amit Gupta. Sir, thank you very much for talking to Fin Business. There are many things I would like to learn from you. The first thing I would like to learn from you is, the government of India is going ahead with digital media, Digital India, Startup India, and lot of these initiatives. What kind of benefit, because government itself is coming into the market and telling the whole world that, okay, you should start with PMJDY, you should come with some digital schemes, you should come with financial inclusion. So the government itself is coming into the market and branding financial inclusion, branding the financial sector. What kind of benefits a top player like you can get out of it?
It's a humongous benefit, as you rightly pointed out. Government is pushing very hard in terms of digitization of a lot of transactions. Even they are looking for a financial inclusion for people at masses, and government is pushing for more transaction being done online. When money comes into the system, then people will look for alternatives where they can invest money, what kind of returns that they can generate. And that is the reason post demonetization and government thrust on digitization, we are seeing a humongous inflow coming on the mutual fund side. From SBI Mutual Fund, we are very aggressive in terms of providing digital assets to our investor, where investor can invest through online transactions, so they don't have to fill the form and all. In fact, we have recently started e-kyc, where you can do a KYC online only. So the idea remains that we need to provide a lot of comfort to our investor, a lot of seamless transaction experience, where they don't have to have a hassle of filling the form and transferring the amount. Everything can be done on the click of the button.
So on e-KYC front or on a technical digital front, I will come back to you. But if you could answer me at this point of time, that how important it is for a mutual fund company to consistently give risk-adjusted returns to its investor, because right now, if we speak about financial inclusion or if we speak about financial literacy, the penetration of the investors putting money into the mutual funds and insurance is very less. So what kind of consistency can you bring into the market to attract the investors?
It's a very wonderful question. In fact, bringing music to my ears, because as a fund house, we always believed in delivering a consistent risk-adjusted return. And time and again, consistently we have been telling investors, rather than only looking at the return, they also need to look at the kind of risk which the portfolio or the fund manager is taking, so to deliver that kind of a return. As a fund house, what we have done, we have templatized each of our offerings, what we are offering to the investor, and there is a very clear-cut process being laid out. So investor knows that if he is coming to any XYZ fund, what is the kind of risk we are taking in terms of the portfolio construction, and what kind of returns can be looked at post the risk part. Another thing is that we always propagate about the financial literacy and goal planning for our investors, because whenever they are coming, they need to have a defined goal for which they are investing. The time horizon should be ideally for a long term. They should look at a wealth creation. And mutual funds are the ideal tool for investing and creating wealth over a longer term, rather than saving and beating inflation. So we believe it's a long way to go. If you look at the penetration, as you rightly pointed out, about financial solutions, especially mutual fund, is very, very low at this juncture. But having said that, we are seeing that picking up very fast. Just to give you an example, or maybe give you some data, household saving roughly is at 19% of the GDP.
Absolutely.
If you look at the historical data, of the household wealth, nearly 80% of the money is being invested into tangible asset, which is your real estate and gold, and only 15-17% has come to financial asset. But over the last 1 year, what we have seen a trend that out of 19% of a household saving of GDP, nearly 10% of that, which is roughly 50% of household saving, is coming to financial asset. So we are seeing a strategic shift of household saving moving from tangible asset and coming to financial assets, and there is a mutual fund which is attracting a lot of money. So post demon, if you look at the industry has grown by about 25-30% over the last 6 months.
You likely mentioned just there is a growth, but since you give a data, correct me if I'm wrong. If you look at stock market, the investors, those who actually put into the money into the capital market, are not more than 5%. If you look at insurance industry, combining together life and general insurance, the total investors, total policyholders are not more than 7 to 8%, despite of being there are 52 insurance companies right now. What is that lacking for investors to come into the market and putting money into the financial institutions is not the question that I'm going to ask you. But the question is this, that what can you do, SBI is big brand in the country like India, and SBI Mutual Fund, what can you do going ahead to attract those investors?
You can look at this question in a different manner. With a low penetration, you have a huge potential going ahead. That is how we see it. I totally agree with you, but despite the fact that the most of the mutual fund companies as well as insurance companies are there for more than 2 decades into the industry, and the penetration is still very low and has to catch up. But we are seeing a very good shift, as I mentioned earlier, that from tangible assets, a lot of money moving to financial assets. And there, I believe a credit goes to mutual fund companies, the kind of investor awareness which has been created. You mentioned about the SIP number, and look at the growth which has come, from 2 through 3,000 odd crores, 3,000 crore, which we are getting, say, a year back. We are now touching 5,000 crore. What it means is, from the domestic investor through SIP, the capital markets are going to get 60,000 crore every year, and this number is growing. So we are seeing a shift, and mutual fund companies have put their heart and soul out in terms of educating investor, telling the virtues of investing for a long term, going through the systematic investment plan. And the welcome trend what we are looking at this juncture is, even when the markets are falling, the SIPs are continuing, which used to get seized or being stopped earlier whenever there was a correction. So Indian investor also have got matured. So all across the country we are holding continuous investor education program with our channel partners, going directly, meeting investor, telling them the virtues of long-term investing, asking them to invest through SIP mode, start investing into debt fund. But it's a work in progress, because a country as vast as India and as heterogeneous as India, it will take a little longer time in terms of creating that awareness. But we are sure that from 5.5% what the penetration at this juncture is, we are going to see very quickly we are going to go into a double digit in terms of the penetration amongst the Indian household.
So recently, now there is if you speak about digital India, there are a lot of movements. So recently, even, UIDAI has given an authority, and many mutual fund companies or insurance companies, or in fact all the financial institutions, including payment banks, can use Aadhaar enabled KYC. Conceptually, it looks really nice because you can finish the KYC in just 5 minutes. But how challenging it is to implement that?
As I mentioned that we have started this e-kyc, which is primarily linked to the Aadhaar thing. Additionally, for investing into mutual fund, you have to complete some other documentation, which is KRA, about your income and other documents. So the idea remains to provide a lot of convenience and ease to our investor, where rather than they running around, they can do their KYC online. And I believe the challenges are getting lesser by every passing day, because most of the companies are inventing and trying to provide solutions where investors don't have to face a hassle of getting the e-KYC done. So I believe the timing is getting lower, and more people are now facing and feeling it very convenient of investing into mutual fund and doing their KYC online.
At SBI Mutual Fund, are you considering to adopt, a total return index policy? Are you going to, benchmark your funds against total return index? If you could, elaborate on that, because that is a new trend that we are seeing in the industry.
We have just seen, a couple of AMC doing it, and we as a fund house always believe that anything which is in the interest of the investor, we will always do that. So if this is a trend, and we believe if it is going to help investor, surely in the days to come, we can always consider it.
But what is the biggest benefit if you look at this index?
More than the benefit, I believe the total return index takes into account whatever dividend which has been paid by the companies, and it adds to your benchmark returns. So this is how things have been done. A couple of AMC have just started it. It is just for a better benchmarking or tracking of your fund performance vis-a-vis the benchmark which it tracks.
I would like to also take your views on the industry participation, or if you give me some perspective on the industry. There are many mutual fund companies closed down their shop in last 2 years. If you at least 5 to 10 companies closed down their shop. At one side we are seeing retail participation is really high in SIP, and on the other side the companies are closing down shop. What could be the reasons behind closing down those shops?
Any industry moves in the economies of scale. So, and mutual fund per se is a very thin margin business. You hardly make any money, and the kind of investment which you have to do is pretty big, and the general turnaround time is pretty high. So what is happening is, that is the reason we are seeing a lot of consolidation within the mutual fund industry. Additionally, while we are seeing a retail base expanding very fast, even the HNI base expanding very fast, their trust on AMC also is getting thinner. So there are very few companies on which they are investing, and they are investing big time. So we have seen there is a big consolidation happening within the industry, and the top top 5-10 players getting disproportionate share of the money. See, please appreciate the fact when people are putting money, they need to look at the background of the companies which are there, and what kind of a commitment they have for the Indian investor and what kind of a vintage they have. So that is the reason the top 10 players are getting bigger by every passing day, while the fringe players are moving out.
Any particular technology that you want to adopt at SBI AMC? Because if you look at banks or BFSI sector, at large, everybody is talking about artificial intelligence, blockchain, all those technology.
So we are in the process of doing it. Blockchain is something which is very much in across the globe. Indian companies also are looking to adopt it. Artificial intelligence, something which we are doing it already in terms of analyzing the investor behavior trend and where they are investing. Even the big idea, data mining and all, we are exploring. So these kind of a trend, whenever the new technology is coming as a financial house, we need to keep on exploring that how we can use it to benefit our investor. So that is a regular thing which we'll keep on doing. I cannot say whether we will choose one or two. Other technology, we will be using most of the technologies which are there for on an anvil.
All right, Amit, thank you so much for talking to
Pleasure entirely
mine. It was wonderful, talking to you. It was wonderful sharing. Thank you so much.